Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Bluechemical Ltd. Annual Report. China Bluechemical Ltd. offers a diverse range of businesses and services across various sectors. At its core, the company processes natural gas and develops, produces, and sells chemical fertilizers and products globally. The company operates through several key segments, including urea, phosphorus and compound fertilizer, methanol, acrylonitrile, and others. Within these segments, China Bluechemical Ltd. offers a variety of products such as urea, methanol, phosphorus fertilizers, compound fertilizers, acrylonitrile, and related products. In addition to its core business, the company also engages in port operations, transportation services, and overseas shipping services. It trades in fertilizers, chemicals, coal, and coal products, further expanding its reach into the global market. Furthermore, China Bluechemical Ltd. is involved in mining activities, including coal mining and phosphorus processing. The company manufactures and sells a range of chemical products, such as phosphorus ore, polyoxymethylene, and methyl methacrylate, solidifying its position as a major player in the industry. Overall, China Bluechemical Ltd.'s extensive portfolio of businesses and services underscores its commitment to providing comprehensive solutions across various sectors. China Bluechemical Ltd. maintains a market capitalization of $12 billion, broadly in line with the industry peer group. China Bluechemical Ltd. trades at a higher price-to-earnings ratio of 11 times and a lower price-to-book ratio of 0.57 times relative within the industry. This suggests a potential market detachment, as China Bluechemical Ltd. trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The balance sheet appears very conservative, with liabilities representing only 19% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.89%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth in a given period can be attributed to several key factors. Firstly, an increase in sales of urea, methanol, and phosphorus fertilizers contributed significantly to revenue growth. Additionally, sales to external customers in the PRC increased by 0.7%, resulting in a total revenue of RMB 12,029,054. Furthermore, the sale of goods saw a notable increase of plus 121,447 from the previous year. The provision of port operation and transportation services also experienced an uptick of 3542 RMB 0. Another significant factor contributing to revenue growth was the increase in contract liabilities within 1 year by plus 167,228. Moreover, interest receivables saw a substantial increase of plus 262,643 from the previous year. The revenue of Hubei Daiyuku also witnessed an 8.5% rise from RMB 1,688,315 to RMB 1,921,087. On the other hand, revenue decline drivers were largely attributed to a decrease in sales of urea, methanol fertilizer segment revenue by minus 15.6%. The provision of transportation services to CNOOC group companies also saw a decline of RMB 5538 from the previous year. Furthermore, procurement from Longmei increased by RMB 153,233,000, which may have led to a decrease in sales to SOEs. Additionally, urea and phosphorus sales to Guangdong Tian Agricultural Means of Production Co. Ltd. decreased by RMB 173,857,000. The company's financial performance indicates a consistent generation of positive operating cash flow. According to various summaries, the net cash inflow from operating activities has been steadily increasing over the years. In 2025, the company reported a significant net cash inflow of Rm 378.7 million, surpassing the previous year's figure of Rm 522.553 million. This trend suggests that the company is efficiently managing its operations and generating sufficient cash to cover its expenses. The positive operating cash flow is a testament to the company's financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the debt level has decreased by a total of RMB 11,081 from RMB 2,061,103 in 2024 to RMB 2,050,022 in 2025. This represents a decrease of 0.2% in the gearing ratio, from 9.8% to 9.6%. Furthermore, interest-bearing bank and other borrowings have also decreased by RMB 7120 from RMB 2,119,124 in 2024 to RMB 2,112,004 in 2025. In terms of interest expenses, the company has experienced a substantial decrease of 13.1%, or RMB 6.9 million. This is reflected in the total interest expenses, which have decreased by 45,853 from RMB 52,759 in 2024 to RMB 44,313 in 2025. Additionally, interest expenses have also decreased from RMB 51,199 in 2024 to RMB 44,313 in 2025, representing a decrease of RMB 6886. Overall, the company's debt level and interest expenses have shown a notable decline over the past year, indicating a positive trend in the company's financial health. And the company's performance across various segments and regions has been mixed in the recent period. On a positive note, the phosphorus segment stood out as a top performer, generating significant revenue of RMB 3,301,789 and achieving a profit of RMB 276,511. This is a notable achievement, indicating strong demand for phosphorus products. In contrast, the urea-methanol fertilizer segment struggled, recording a substantial loss of RMB 93,272. Similarly, the others segment also underperformed, with revenue declining and profit before income tax decreasing. These results suggest that these segments require attention to improve their performance. The acrylonitrile segment showed some promise, although it was not as strong as the phosphorus segment. While its revenue of RMB 3,046,490 was respectable, its profit of RMB 62,009 was relatively modest. However, it is worth noting that this segment incurred a loss of $73,632 in foreign currency terms. Overall, while some segments have shown promise, others require improvement to boost overall performance. The company will need to address the challenges faced by these underperforming segments to achieve its full potential. Management is focused on ensuring stability in various aspects of the company, including supply chain operations and environmental sustainability. They have achieved significant milestones, such as zero environmental pollution incidents and exceeding production targets for multiple products. The company has also demonstrated financial stability, with sufficient capital and effective management of exchange rate risks. In terms of strategy, management is prioritizing technology empowerment and quality enhancement to drive efficiency improvements and transformation. The board of directors plays a crucial role in determining business plans, investment strategies, and profit distribution policies. They have also implemented an internal control system and adopted a dividend policy to ensure the company's long-term success. Overall, the company's outlook is one of stability, growth, and strategic planning for future development. The company has made several significant acquisitions as part of its business expansion strategy. The first acquisition is the anhydrous hydrogen fluoride project of DYK Company, valued at RMB 73.5 million. This was followed by the chemical project in respect of DYK Chupi Mountain Phosphogypsum Dry Slag Yard project, which cost RMB 60 million. Additionally, the company acquired the Basuo Port Company New District Petrochemical Terminal project for RMB 23.2 million, specifically to support its acrylonitrile project. The company also entered into a joint venture agreement with another shareholder to jointly control over Hubei Wengfu. These acquisitions demonstrate the company's commitment to growth and expansion through strategic investments. On the other hand, there have been no divestitures mentioned in the report, indicating that the company is focused on building its business rather than selling off assets. The company has a history of paying dividends to its shareholders. In fact, the board of directors recommended payment of final dividends for 2025 in the amount of RMB 516.3 million, which translates to RMB 0.112 per share. This indicates that the company is committed to returning value to its investors through dividend payments. Concerns about inventory buildup and potential future supply chain disruptions have been raised. The data suggests that inventory levels have fluctuated over the years, with an increase in cost of sales in 2025 after a decrease in 2023 and 2024. High inventory levels were mentioned in the second quarter, indicating a potential issue. Furthermore, there is a concern about inventory buildup, as evidenced by the 12% increase in raw materials and spare parts, while work in progress decreased by 17%. This imbalance may lead to supply chain disruptions in the future. The commissioning of new production capacity on a concentrated basis also raises concerns about potential disruptions. With new production capacity expected to come online at a faster pace than demand growth, there is a risk that inventory levels will remain elevated and cause supply chain issues. That concludes the financial summary for China Bluechemical Ltd. Feel free to comment below, and I will be happy to answer them when possible.